How to raise your score in 6 simple steps. Are you wanting to buy a house, but you don't know if your credit score is good enough to get a loan? What is considered a good credit score? And what is the minimum score you need to get a home loan? Hi, I'm Lori Dawn Stevenson with Century 21 Accord Realty in Swift Current, Saskatchewan. If you want to get a low mortgage interest rate, you'll need a good credit score. Achieving good credit can take years, but there are a few steps you can take to give your score a boost. I will go over some tips that can help you quickly raise your credit score so you can be on your way to buying your new home. First thing to do is get a copy of your credit report. There is a lot of websites that can give you your credit score for free, such as Credit Karma and Borrowell. This is called a soft pull and will not affect your credit score. Review your report and make sure that everything is accurate. It is very common for banks or other agencies that report to the credit bureaus to make reporting errors that can hurt your credit score. Even if you haven't missed a payment ever, many consumers overlook the benefits of a periodic credit report review. If you find an error, you'll need to file a dispute with the credit bureaus. This is actually fairly easy, and I can certainly help you with this too. Next, pay your credit card every month on time. 35% of your credit score is payment history. Once your credit card is paid off, do not close that credit card. That erases all the good history with it. If it's your oldest credit card, that also reduces your length of credit. 15% of your credit score is the length of your credit. So instead of closing your credit card, make sure to make occasional purchases to keep it active. When you keep the card active, banks are less likely to reduce your credit limit or close the card. A credit line decrease impacts your total credit utilization ratio, which is bad. You want to maintain your account history so your score will continue to go up. Credit card utilization. Credit utilization makes up 30% of your score. So what is it? Simply put, this just means what you've used versus what you have available. It is calculated by how much credit you are using divided by the total amount of credit you have access to. So for example, if you charge $1,000 to your credit card and your total credit limit is $5,000, that is a 20% utilization. Most experts recommend keeping your overall credit card utilization below 30%. Lower utilization rates suggest to creditors that you can use credit responsibly without relying too heavy on it. So a low utilization rate is usually correlated with higher credit scores. Now, if paying down your card is not something you can do right now, you can actually request a credit limit increase. By increasing your credit limit, you lower your utilization. Your payment history is the most influential credit score factor. It makes up 35% of your credit score. Making your payments on time is huge. If you have any late payments, call up your credit card company and see if there's any way they will help you out and remove that late payment for you. Sometimes credit card companies will do this, especially if you only have 1, maybe 2 late payments and you have a history of paying on time. Even if you can only make the minimum payment, your account remains in good standing and you will not be dinged for having a late payment. The 5th thing to look at is age over credit limit. Lenders are looking at consistency. An option is to add yourself as an authorized user to someone who has a really good credit score. A family member with a higher credit score than yours can actually add you to their credit card as an authorized user. Doing so can actually positively affect your credit score when the card has a long account history, on-time payments, and a low credit utilization ratio. This is a quick fix though, not a permanent solution. You still need to take care of your credit. And 6, have a variety of credit accounts. 15% of your credit score is the type of credit you have. So having a variety of credit accounts shows that you can manage your credit responsibly and make different types of payments regularly. For example, you might have a credit card, a home mortgage, and a car loan. Each type of account can benefit your credit score. I hope these tips will help you in raising your credit score you have any questions about any of these steps, please give me a call. I am so happy to help you. This is Lori Dawn Stevenson, helping you move up to your Swift Current dream home.